Watching the markets overnight, the stock index futures are limit down. The Dow was limit down and is off of limit down. You see when the market does this, it's reached its limit, and that number is right around, you see in the S&P, 4.89%. It keeps trying to come off the limit, but it stays there. NASDAQ, same thing, huge day. Crude oil down 31%. These numbers just almost look like a joke to me. For the crude oil to be at 28.24 for bonds. The 10-year, this is the 30-year bond, but the 10-year went below 0.5%. These are such extreme numbers that it's almost unbelievable. And I want to put volatility in perspective, so we're going to look at the daily ranges and the VIX, and I'm going to show you what happened in the past and what's going on now. So what you're looking at in this chart is the average daily dollar range. So each day has a dollar range, and we average the last 12 days in E-mini S&P, gold, crude oil, and bonds, and added those up. And so what you see at the bottom, right now what you have here is 17,103.65. So if you were to buy the low and sell the high, or vice versa, depending on the trend, then you would have been able to capture $17,000 on that day. So it's not a tool to suggest that you should try to catch that much. It's to suggest how much range risk is in the market as well as opportunity. So you see this far exceeds anything on the chart going back to 2013. At the end of 2018, you saw the daily dollar ranges were around 10,000. And so you see $10,000 in here. And then you see right here in October of August of 2019, 11,000, and now we're at 17,000. Has it done this before? If we go all the way back to the financial crisis, you see the average daily dollar range was, the largest one in here was around 1750 on October the 14th. But the financial crisis was well into its sell-off. So let's go back here to, let me find this here, 2008. All right, here we are, 2008. It was well into its sell-off. It made its peak up here, and this time frame was from here to here is over a year. Over a year of selling, it finally does this. And the point values on the stock index futures are much lower. So you see these lower point values, and we're at much higher point values. I'm going to show you that in the next chart. The average daily range is the percentage of closing value. Looking at the cash, $INX, 2.6%. You see 0.026, that's 2.6%. That's not that much. You see that happening in December of 2018 when we had that big sell-off at the end of the year. Similar scenario here, we're at 2.6%. Where was it in the financial crisis? Let's put a line right here at 2.6%, and we'll see how often this happened. So right here at 2.6%, it came close to happening here in 2015, September 2015, and that's when the Fed started increasing interest rates. And in 2011, there was a lot of volatility right here in 2011. Up and down, a lot of up and down days right here, a lot of volatility in August of 2011, and in May of 2010. So that's around the flash crash time. And then what happened during the financial crisis? You see a high, it was around 7.7%. was what I calculated when I looked at this, 7.7% at the very high. And so imagine if we have a 7.7% daily dollar range, we'll be at ranges 3 times larger than we are now, because we're at higher values now than we were back then. So this is a little perspective of what's going on in the markets and how extreme it is, and how we have not seen, we've not really seen these types of numbers. Yes, we saw them during the financial crisis, but to have these have the average daily dollar range of 17,000 when the percentage range is only 2.6% is different. So it's a little different this time because we're at higher values. So we will see what happens this week. A lot of fear. This sell-off is a lot of it's based on crude oil. We know that if crude oil is down, it lowers prices at the pump for the consumer, which can be stimulative to an extent, but if it's too low, it will bankrupt the oil industry, the energy industry. The prices in crude oil are not high enough for those companies to be profitable, and a lot of oil companies will go under. There'll be a lot of layoffs, so it can really hurt the energy industry if energy prices are too low. And so you see big selling tonight. Coronavirus, crude oil, gold just is, I can't get my head around gold. It's confusing me quite a bit, this price action in gold. It will not go higher. It's up here at 1700, and then it's down here at 1659, while the stock index futures are still limit down. They haven't come off their limit down, but the gold is selling off, and it seems like they try to short gold before stocks rally. It's almost like a buy signal now that we're limit down, but I don't see the market coming off its limit down. So gold seems like it ought to be moving higher, a more steady move higher, but it keeps having these $50 and $80 pullbacks when it barely makes new highs. And so gold is confusing a little bit, and it's been choppy trading gold. And so these are really, really extreme markets and really, really extreme scenarios. So we're watching these, working on making adjustments to these setups, and going forward from here. I've looked at some setups tonight and this weekend, and I'll be giving you more information on those for the All Strategy Access.